What's going on, everybody? Welcome into the Wednesday, January 22nd, 2025 edition of the Daily Energy Newsbeat. Stand up. Here are today's top headlines. First up, IEA says global gas markets set to remain tight in 2025. We'll stick on that natural gas LNG theme. Trump lifts pause on non-FTA LNG export approvals. We knew it was coming. And then finally, in the news segment, we'll quickly touch on Saudi Arabia issues BRICs membership update. Ooh, spicy, spicy, spicy. I will then quickly cover everything that happened in the oil and gas markets today and let you guys get out of here. Stu is out on assignment, so I am filling in and rocking a solo show today. Let's go ahead and kick it off. All right, IEA says global gas markets set to remain tight in 2025. This is super interesting. This is specifically focused on natural gas, which, again, if you're concerned about what's going on in oil, it looks like supply might quite outpace demand, but what they're saying on the oil side is the demand may not be there. But this is focused specifically on natural gas. The IEA does these kind of quarterly gas market updates. Their quote was that the markets have, quote, moved towards a gradual rebalancing last year after the supply shock that followed the Russia full-scale invasion of Ukraine in February 2022. Again, pointing out that this report is talking about global natural gas markets, not necessarily the U.S. gas markets, which do remain slightly overbalanced from the standpoint of we got a lot of natural gas sitting on the sideline being flared. We're talking specifically about the global gas balance. So basically, the IEA is talking about that. The reason why they're saying it's tightened a little bit, aka that the supply is now getting back in balance with demand, is mainly due to Asia. In terms of from the demand side, Asia's their global gas demand rose by about 2.8 percentage points, or about 115 billion cubic meters in 2024, which was above the 2% growth rate that they saw somewhere between 2010 and 2020. We also saw below average growth in liquid LNG output, which really kept supply tight, and there was a bunch of kind of wild weather events that happened. This report is basically saying that the similar dynamics are expected to persist in 2025 as this new export capacity gets going. A lot of that's coming from the U.S., which we'll cover in the next segment, but also Qatar is coming online both over the course of next year and the second half of the decade. They also note that geopolitical tensions have kind of continued to kind of push volatility in gas markets. Their quote, though the halt of the Russian piped gas transit via Ukraine on January 1st, 2025 does not pose an immediate supply security risk for the European Union, it could increase European LNG import requirements and further tighten global market fundamentals in 2025. We know what's going on with Moldova and all that stuff. The quote from the IEA's Director of Energy Markets and Security, I'm going to butcher this name, Kishuk Samadori, quote, gas market fundamentals have improved over the past year, but for now we are still seeing significant tightness due to rising demand and muted growth in LNG capacity. Heightened geopolitical uncertainty adds to the risk. He goes on to say, while international cooperation on gas supply security has expanded since the recent energy crisis began, greater efforts are needed from responsible producers and consumers who should strengthen their collective efforts to reinforce architecture for safe and secure global gas supplies. So, global gas markets are going to continue to stay tight. And what that does is that bleeds over into this next one I want to talk about, which is Trump. First day, full day in office, Trump lifts pause on non-FTA LNG export approvals. This was via an executive order, which was widely expected, to basically get our LNG export terminals going. Specifically, according to the order, the energy secretary, great friend of the show, Chris Wright, is directed to restart reviews of applications for approvals of LNG projects, quote, expeditiously as possible, consistent with applicable law. The order goes on to say, quote, in assessing the public interest to be advanced in any particular application, the Secretary of Energy shall consider the economic and employment impacts to the United States and impact of security to its allies and partners that would result from granting the application. They're also going to look at the Alaskan LNG potential, which includes all the permitting and infrastructure to get pipelines and all that done. And this, why this bleeds into what the IEA is talking about is the U.S. has an ability to help wean Europe off its Russian supply, which means the security risk that everybody's scared about Russia, you can get off Russian gas and bring yourself more energy security if the United States would get its act together and we would start building these things. And it's exactly what Trump and Chris Wright are going to be doing. It's great that we have them in office. We remember that in January of 2024, the Biden administration paused pending decisions on exports of LNG to non-countries until the DOE can update its underlying analysis for authorizations. Basically, they released their report last month, but it didn't really say anything. There are several projects that will benefit from this. These include Kimmeridge's Commonwealth LNG project in Cameron, Louisiana, and Venture Global's LNG CP2 project in Louisiana. Also, the Sabine Pass Stage 5 expansion by Cheniere Energy and Energy Transfer's Lake Charles LNG export facility. And Sempra, their Port Arthur LNG export, will also benefit. So lots of great benefits if you're in the LNG space. Good for you. Let's move over now. Saudi Arabia issues BRICS membership update. This just comes down to Saudi Arabia being probably up there with the United States is the only other country that can move global markets. They are still evaluating a potential membership of BRICS, according to the Minister of Economy and Planning, Faisal Al-Ibrahim. He told Bloomberg in an interview on Monday. Remember, the initial bloc was established in 2009 by Brazil, Russia, India, China, with South Africa joining 2 years later. They've also then admitted Egypt, Ethiopia, Iran, and the UAE to become full members in 2024, and Indonesia has just joined in 2025. Quoting the Saudi economy minister, we've been invited to BRICS, similar how we've been invited to many other multilateral platforms in past historically. We assess many different aspects of it before a decision is made, and right now we are in the middle of that. He emphasized that they are always focused on fostering more global dialogue. This is going to be interesting because this could shift the balance of power from OPEC to BRICS to becoming people are going to start watching the BRICS meetings more. They're going to watch the OPEC meetings when it comes to what's going to happen with global supply and demand. You're also talking about, obviously Russia is also in BRICS and in OPEC, but China is also in BRICS and not in OPEC, which is probably outside of the United States, the other big player in kind of this global energy economy. And it'll be very interesting to see how this plays out. If Saudi joins BRICS, it's kind of a shift of power, in my opinion, from OPEC to BRICS. We will be following this closely. Let's go ahead and jump over to finance, guys. But before we do that, let's quickly pay the bills. As always, thank you for checking us out. World's greatest website, www.energynewsbeat.com. Stu and the team do a tremendous job making sure you stay up to speed, and that site stays up to speed with everything you need to know to be at the tip of the spear when it comes to the energy and the oil and gas business. Go ahead and hit that description below for all links to the timestamp, links to the articles. If you want to subscribe to us via Substack, that's a great way to support the show. Go ahead and log in. We've got a bunch of great paid content coming for you. That's theenergynewsbeat.substack.com. Also, check us out, The Deal Spotlight. I haven't talked about that in a bit, but that's my M&A podcast that I do just after wrapped up a great interview with Sovereign Capital President Eric Rice, a great friend of the show. He also has a tremendous podcast. I highly recommend checking him out. It's called The Rice Report. You can find him on YouTube. But we wrapped up a great oil and gas Bitcoin mining deal that actually he's co-sponsoring right now. So it's an awesome opportunity to learn a little bit about an active fund. As always, if you do want to invest in oil and gas, guys, invest in oil.energynewsbeat.com. We can get you all the details on what it looks like as an investor and how you might be able to profit from that. You can also, again, if you want to become Billy Bob Thornton from Landman, investing in oil and gas is the great way. Go ahead and check us out. Again, invest in oil.energynewsbeat.com, and we will get you all the information. Let's quickly run over some, markets quite not closed yet. It's about 2 o'clock as I'm recording this. Markets are up though about 7/10 of a percentage point in the S&P 500. NASDAQ basically the same, 2 and 10, 2-year yields flat, 10-year yields down a full percentage point. Bitcoin up just over $106,000, absolutely ripping. Crude oil, not a great day. It was down about 1.8 percentage points, 75.89. Brent oil was actually up about 0.2 of a percentage point, 79.32. Natural gas down about 4.5 percentage points, 17 cents to $3.76. XOP, which is our E&P contract, was down slightly less than oil, about 1 percentage points, or about 150 off its index. Again, Trump is basically, and one of the reasons why oil is down is that on day one of the Trump administration, he declared a national energy emergency, which kind of has raised concerns in the U.S. over what U.S. output would do in terms of, which is obviously if you're expecting an oversupply, well, then all of a sudden, if now you're in an energy emergency, we need to hurry up and get all this energy done. Well, prices are going to fall. Again, we've talked about this ad nauseum. How much that'll impact, I don't actually know. He does call for higher oil output. The question is, where's that going to come from? He's currently considering 25% tariffs on Mexico and Canada, which will be interesting. That will definitely drive the cost of goods up and will drive the price of energy up as we import a lot of Canadian oil. He said that, quote, we will probably stop buying Venezuelan oil. I think emphasis on the word probably. It is, it's kind of funny, the word probably. EIA economists on Tuesday reiterated that their expectations for oil prices are to decline both this year and next. Their quote is strong global growth in production of petroleum and other liquids and slower demand growth put downward pressure on prices. So obviously, I think people are doing that. And as we mentioned at the top of this segment, that is limiting the amount of oil we'll buy from Venezuela. It's not going to do much, but I think it's there. All that goes to show, guys, markets are still hanging in there. And it's one. But this was a short show today with Stu being out, so I'm just going to go ahead and jump, let you guys get back to work and start your day. Appreciate everybody checking us out here on the world's greatest podcast, EnergyNewsBeat.com. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow, folks.